Hey everyone, welcome back to Corporate Decoder, the place where we promise to make even the driest financial filings sound like a thrilling detective novel, or at least less like a sleeping pill. Today we are diving into the annual report, specifically the Form 40F from Colliers International Group Incorporated. Think of this as the company's yearly report card telling us how they did financially, and if they played by all the rules. If you like getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below, where we break down these filings even further and share what we're seeing. So Colliers International Group Inc. is essentially a global leader in commercial real estate services. They help businesses find, manage, and optimize their workspaces. This report covers their performance for the fiscal year ending the 31st of December 2025. The filing starts by confirming they are submitting their annual information form and audited financial statements. This means we get a pretty comprehensive look at their financial health, not just a quick summary. Now, a key detail is the number of shares outstanding. As of the end of 2025, they had just under 50 million subordinate voting shares and about 1.3 million multiple voting shares. This is important for understanding ownership and how any future stock performance might be valued. They also confirm they have met all their reporting obligations for the past year and the prior 90 days. This is standard stuff, just showing they are compliant. And they have been submitting their electronic filings on time, which is good for transparency. Colliers is not considered an emerging growth company. This generally means they have to follow a more rigorous set of reporting rules and are expected to have more established internal controls. And importantly, they have filed a report on management's assessment of the effectiveness of their internal control over financial reporting. This is a big deal, especially after the Sarbanes-Oxley Act, and it means an independent auditor has looked at their financial reporting processes. The report essentially bundles together a few key documents. The first is their annual information form, which provides a broad overview of the company's business, its operations, and its industry. Then we have the main event, the audited annual financial statements. This includes balance sheets, income statements, cash flow statements, and all the important notes that explain those numbers. And finally, management's discussion and analysis, or MD50R. This is where the company's leadership explains the financial results in plain English, discussing trends, risks, and future outlook. The company's top executives, their CEO and CFO, have reviewed and confirmed that their systems for disclosing information are effective. This means they are confident that when they report something, it is timely and accurate. Management specifically looks at their internal controls over financial reporting. Think of this as the company's internal rulebook and checks and balances to make sure their financial numbers are reliable. They've used a well-known framework for this assessment and have concluded that their controls were effective as of the 31st of December 2025. They even note that an independent auditor, PricewaterhouseCoopers LLP, has also reviewed this and stated it in their report. Good news on this front, there were no significant changes to their internal controls that materially impacted their financial reporting during 2025. Stability here is usually a positive sign. Now, let's talk about the people overseeing the finances. The company has an audit committee, and they've confirmed they have an audit committee financial expert on board. This is someone with a strong background in accounting and finance, which is crucial for a company like Colliers. The report details Mr. L. Frederick Sutherland's impressive experience, including his past role as Executive Vice President and Chief Financial Officer of Aramark Corporation, and his current board memberships. This reassures investors that there is experienced oversight. They also affirm they have a code of ethics and conduct that covers everyone from the top brass down to every employee. This sets the ethical tone for the entire organization. Let's look at the money spent on their auditor, PricewaterhouseCoopers LLP. This table shows fees for different types of services. In 2025, Colliers paid PricewaterhouseCoopers LLP a total of approximately 6.93 million Canadian dollars. This breaks down into about 4.8 million for the main audit, 314,000 for audit, related services, and a significant 1.77 million for tax services. In 2024, the total fees were slightly lower at about 6.87 million Canadian dollars. The audit fees were a bit lower, around 4.6 million. Audit-related fees were 349,000, and tax fees were 1.85 million. It is interesting to note that the tax fees were slightly higher in 2024 despite the overall decrease, suggesting a potentially substantial tax project in that year. The audit firm has confirmed that the audit committee pre-approves all these services. Colliers states they do not have any off-balance sheet arrangements. This means they aren't using tricky accounting to hide debts or liabilities. Any significant financial commitments are openly disclosed, specifically referring us to their discussion on liquidity and capital resources within their MD-CYA. Similarly, they point to their MD-CYA for details on their contractual obligations. This is standard practice, guiding readers to the relevant sections for these important details. The company confirms they have a dedicated audit committee, which is a requirement for companies listed on major exchanges. The members are listed as L. Frederick Sutherland, John P. Curtin Jr., and John Sullivan. Colliers is classified as a foreign private issuer, and their shares are traded on both the Toronto Stock Exchange and the Nasdaq. This means they can follow certain home country corporate governance practices instead of all Nasdaq rules, but they must disclose these differences. They direct us to their website for those specific details. They also state that information regarding mine safety disclosure is not applicable, which makes sense for a real estate services company. Here is a commitment they make. Colliers agrees to cooperate fully with the Securities and Exchange Commission staff, making representatives available to answer questions and provide information promptly. This is a standard undertaking to ensure regulatory oversight. They've already filed a specific form, the FX appointing an agent in the US to receive legal documents on their behalf, and they commit to updating this if anything changes. The report is signed by Christian Mayer, their Chief Financial Officer, on the 20th of February 2026. This date tells us when they officially certified the accuracy of this annual report. Now, this is the exhibit index. It lists all the documents that are officially part of this filing. We see the annual information form as Exhibit 1, which we discussed earlier. Exhibit 2 contains the core financial statements and the auditor's report. This is where the hard numbers reside, providing a detailed look at their financial position and performance according to us generally accepted accounting principles, or GAAP. Exhibit 3 is the management's discussion and analysis we've mentioned, which is crucial for understanding the context behind the financial numbers. Exhibits 31 and 32 are certifications from the CEO and CFO, essentially vouching for the accuracy and fairness of the financial statements and disclosures. They are required by law to state that they have reviewed the report and are confident in its integrity. Finally, Exhibit 101 is the interactive data file. This is formatted in a way that makes the financial data easily searchable and analyzable by computers, which is part of the SEC's push for greater digital transparency. So, what's the story here? Colliers International Group Inc. is presenting a picture of a well-managed, compliant, and transparent company. They've met all their reporting requirements and have solid internal controls confirmed by both management and independent auditors. The focus on transparency and the experienced financial oversight through their audit committee and financial expert are definite strengths. However, the real meat, the financial performance, isn't fully detailed in this specific Form 40F itself. This form acts more as a cover for the more detailed financial statements and MD Souvier, which are provided as exhibits. To truly understand their business health, we need to deep dive into those exhibits. We know they've had their financial statements audited, which is a positive sign of accountability. The fees paid to PricewaterhouseCoopers LLP seem significant but are within reason for a company of Colliers' global scale and the services provided. The absence of off-balance sheet arrangements is also a good indicator of financial clarity. In conclusion, based on this Form 40F, Colliers appears to be operating with a strong commitment to compliance and financial integrity. The key takeaway is that this report confirms they are providing the necessary documentation for a full financial review, and it highlights the robust oversight mechanisms in place. To truly assess their direction, strengths and weaknesses, we would absolutely need to analyze those attached financial statements in the MD5DA, but for now, the filing itself signals a company that is on solid regulatory ground and ready for a thorough financial examination. Alright, that is our breakdown of Colliers' latest annual filing. What is your take on these filings and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.